Cool. I think this, does this work? Or is this as well? Cool.
Yeah.
Okay, sorry everyone. Firstly, an apology, because I'm a tax advisor and an accountant, which means you're going to get a double dose of boring for the next 5 minutes. But the thing that I'm going to talk to you today about is obviously tax, and whilst sort of the headline is 2025, not much is really changing in 2025, right? We had the budget. Yes, capital gains tax is going up. That's not very exciting. At least it's not for me anyway. So the three things I'm going to break this down into are really structure, tokens, and records. And the theme throughout all of this is really think tax. And I'm sorry if those two words have already ruined your Christmas, but sadly this is what I do on a day-to-day basis. So first of all, structure. Okay, right, so you're setting off, I'm going to piggyback on what we've already heard, and all those things James just said then we had to think about. Right, where are we based, where are founders based, what are we doing? What does that structure look like? We see so many projects and so many clients that come to us who have gone and taken the legal advice, that's great. But we've got, in some cases, nearly over 100 years of anti-avoidance tax legislation in the UK. And that will very much cause you to have a very bad Christmas if that goes wrong. Why? Well, you can't just go up and set up a BVI company on your own, right? You might need to have an offshore company for the purposes of issuing a token or something else that we're doing here. But if that goes wrong, that can be subject to income tax on you as an individual, and you'll end up paying 45% on that. That's half of your income gone straight away, right? That's just kind of an example of doing these things together. Don't go and get legal advice without looking at the tax implications as well. Where we have clients that come to us that have taken very good legal advice but haven't considered tax, it's very, very difficult to unwind that. It's much easier to get it correct from the start when you're thinking about what that structure looks like. Hopefully I haven't put the fear of God into you already. Sorry, everyone. As I said, this is going to be very boring and very depressing. 2, tokens. Right, so you might be selling SAFs, you might be allocating tokens to founders, you might be looking at rewarding the team. There are various things that we need to think about there from a tax perspective as well. Where are the team, where are the founders based? When are they getting the allocation? Are they buying the tokens? Are we giving them the tokens? You certainly don't want to be giving tokens post-TGE, or probably after a few investment rounds of SAFs. Why? Because those tokens then have value. And if you're then giving out tokens, you're creating a huge income tax problem, certainly here in the UK, and I don't doubt various other jurisdictions as well. So not only do we have to think about structure, we have to think about how are we distributing the tokens, where are they going, and at what point in time are we doing that? Because that's really, really important from a tax perspective. And then lastly, and I would say this, sorry, but records. You'd be amazed at the number of people that come to us and go, oh, I think we have to file something. And you go, great, cool, let's have a look at your records. Oh, awesome, 50,000 transactions, what are they? You don't know. Why don't you know? Okay, great, it's all on chain and everything's there, right? And it's been recorded, so that's okay. No, that's not. Sadly, okay. We need to make sure that we are keeping records. And yes, this is about tax, so why am I talking about records? Because if you're a business and you're sending people crypto and that's a legitimate expense, then you're going to have some documentation for that. If HMRC did inquire into you, and the inquiries are certainly coming, how can you prove that that is a genuine business expense? Why should they give you a deduction for that? So it's really, really important not only to have the right setup, get the tokens right, but start doing things properly. And there's so many on-chain tools that will help get all of those records and everything down, but it does take that human involvement to make sure that that is correct and that is right. And certainly on an individual level as well, we're a bit slow tax advisors, right? We quite like to wait till after the tax year end and go, give us your tax information, we'll put your tax return together. So much happens so quickly in crypto. Why wait for all of that time for your tax advisor to put everything together? What you need is up-to-date records. Harry mentioned it earlier on about getting your Coinly up to date as being one of your goals for 2025, right? But no jokes. Because if something happens quite quickly, you're going to want to know what those tax implications might be if you did want to sell something right now, rather than going to Coinly and finding that you haven't synced all your wallets, or there's some new exchanges that the APIs aren't connected and you don't really know what's going on, so hey, quick, let's just make a quick disposal. But the tax will follow up on that. So records are really important. So please think tax. Top 3 things to know for crypto tax in 25. Think tax, please, because it's so much harder to get things right after things happen. Sorry for putting the fear of God into you all. I hope you have a lovely day, and I'm sorry for doing tax.
It's super important, and it's something, as Ben was saying, you need to think beforehand to be able to do, rather than trying to retrace yourself back afterwards.